The S&P 500 recouped previous 3 months of losses in November. It gained close to 9% for the month. The Nasdaq gained more than 10% in the month. Dow Jones Industrial is less than 2% from its all-time high. The market participants are still showing no fear, while gold make a new all-time high. So is gold telling us something? Welcome to another weekly S&P 500 and financial market analysis. November ended the month positive and one of the best months of the year. It gained 8.92% and recouped all the losses from previous 3-month period. It is 7.68 points from the July high. Technically, it has not made a monthly higher high. All the major market indexes are up 8% or more for the month of November, except for the New York Stock Exchange Composite. It was up 7.84%, just a bit under 8%. Now, the tech-heavy Nasdaq was up more than 10%, and year-to-date, the Nasdaq 100 is still up 46%, and the S&P 500 is up 19.67%. The Russell 2000 has the smallest year-to-date gain. It only up 5.76%, and it is trailing the overall market. The S&P 500 is up for 5 consecutive weeks now, just like the last 6 times that we said the S&P 500 was down 3 consecutive weeks. They were all followed by 5 or more consecutive up weeks. Only 2 out of the last 6 times the market was up 6 consecutive weeks, and that's only a 33%. So the odds are not very high for the coming week to be up, but that doesn't mean it can't happen. And look at the sentiment chart here. We see the put-call ratio ended the week below this headstone between 0.75 and 1, and it closed at 0.698, showing the market participants are getting a bit more bullish and risk on. And the fear index, the VIX, also showed the market participants are still very complacent. The up-down volume ratio was positive for 4 consecutive sessions, with Friday's session showing strong buying at more than 6-1 in favor of the up volume. And the daily advanced decline showed a broad market participation on Friday's rally. More than 80% of stocks were up, with 2,135 more advancing stock than declining stock. And the number of stocks making new 52-week low continued to stay below the 30 level, and the number of stocks making new 52-week high on Friday was 182. And the last time there was this level, it was back here somewhere near the July timeframe of this year. So we need to monitor this internal to see can it maintain this level, or is this just a FOMO type of reaction? Now, there's no divergence between the cumulative AD line, the New York Stock Exchange, to the S&P 500. But if we compare to the absolute level, we could see there is a divergence here. Notice the advanced decline line is underneath the August pivot high here, but the S&P 500 is near the July high. So we are seeing these negative divergence here on a level basis. And the Nasdaq up-down volume ratio was also strong on Friday with 4-1 in favor of the up volume. And the daily advanced decline also showed a bit of a broad market participation in Friday's rally with 2,295 more advancing stocks than declining stocks. The Nasdaq new high, new low is still under 100, although it is improving, but this low level doesn't indicate it is a strong market for the Nasdaq. And the Nasdaq cumulative AD line highlights how distorted the Nasdaq market is, how negative the divergence between the index and the internal market strength. You notice that the Nasdaq 100 exceeded the July high, while the cumulative AD line is still down here near the October low area. Now let's take a look at the 11th sector in the S&P 500. The XLK, the technology sector, is still outperformed on a trending basis, although recently we see a little bit of underperformance. And the healthcare is still underperformed. And the consumer discretionary, we see a little bit of outperformance recently, but the trend is still underperformed. And the financial, we did see a little bit of an uptick recently on the outperformance relative to the S&P 500, but you can see on a trend basis, it's kind of flat. And the communication, we did see a little bit of a downtick underperformance recently, but the trend is still outperformed. And on the industrial, we did see a little bit of an upward tick in the relative performance to the S&P 500 recently, but the trend is still underperformed. And looking at the stable, the consumer stable is still underperformed. The energy is underperformed, although we got a little tick up on the real estate, but the trend is still underperformed. Likewise, for the material, we got a little uptick recently, but the trend is still underperformed, and the utility is underperformed. Looking at the other sector, looking at semiconductor, we did see a little bit of a underperformance recently, but the trend is still outperformed, and the oil is underperformed. Likewise, for the oil exploration, it also underperformed. Retailer, we seem to get a little bit of uptick here recently, but you can see it's kind of flat. And then here the biotech is underperformed, and the miner is got a little bit of an uptick. That's probably due to the recent gold prices, and we're going to take a look at gold a little bit later. So it is getting a little bit of outperforming here recently. And here the bank is kind of flat, although we did see a little bit uptick recently of outperformance. Same thing with the regional bank. And here is the home builder. We see the home builder is still outperforming the S&P 500. So that's remarkable with the high mortgage rate. But the long-term bond is underperformed. Now, looking at the 10 and the 2-year yield, we see that it is still inverted, although it came up a bit, and is sitting at minus 0.346. And the 10-year versus the 3-month, it got a little bit more negative. It is at minus 1.19, so it is still inverted and pointing to a recession. Here we see the 10-year yield dip below the 4.333 level and ended the week at 4.227. So market is pricing in a rate cut for Q1 of 2024. I believe that's kind of wishful thinking. I will not be surprised to see it move back up to this 5.3 before it peaks. And the dollar is still near this 103 area. We'll continue to monitor it to see would it move down toward this 100 level or would it bounce back up to this 104. But I still believe that dollar will go higher. And here's the dollar future. As you can see, the dollar future went down to that 102.66 and got a nice bounce. And right now, I'm basically watching to see would it come back up to this composite point of control near this 104. Now, oil is still holding on to this support here at 74.50. So we're going to see, will it be able to hold this level and bounce back toward the 85 level? I'd be surprised to see oil come down to this 67 area with the current geopolitical environment. Silver moved back above the $24 level last week, and it is back near this 26 area right now. So we'll watch to see would it be able to move above this 26.70. If it does, I wouldn't be surprised to see it move toward this $30 level. Now, gold made a new all-time high last week, and I have been saying that I'm expecting that all-time high to get taken out. So it did that last week. Now, there are two measurement techniques to project some sort of upside target that I normally use when the any kind of financial instrument make a new high because it's in a new territory. One is using the Fibonacci retracement. So I'm basically using this swing here. And here we are looking at the 127 extension, and that places it at 2340, 2,340. Then the other one is I'm looking at this range here. You see this nice consolidation range, and I'm just doing an extension to a 80% and 100% extension. So you can see on the 80% or near the 80%, I'm basically using a Fibonacci ratio of 0.786. And that places it at 2408, 2,408. And the 100% extension is close to 2,500. So we're basically looking for gold to move up above the 2,300 level if it continues to move up, which I do see it continue to move higher for gold. Now, the question to ask is, with gold moving higher, so what might have caused gold to move to this level if it's indeed that it's going to come up to this 2,500 level? Right? Is something broken? That's something to ask. Now, let's take a look at the indexes. The S&P 500 moved above the 4,600 level and closed near the upper range last week. We did see a small pullback in the first part of the week. There were 2 down days last week, and if it weren't for the last 2 sessions, between Thursday and Friday, the S&P 500 would end the week negative. And for the coming week, the upper range is between 4647.90 and 4665. And the lower range is between 4530 and 4541.40. Now, we could still see more upside for the coming week to take out the July high here. So we'll be looking for this July high to get taken out. And if we could take out this July high, then we'd be watching this January 2022 pivot high here at 4637.30. And that would also put the upper range in play. If it fails to take out or stay above the July high, then it could pull back to the lower range here and also move toward this CPI gap. And the Nasdaq 100 was the weakest performer from last week, and they only gained 0.1%. Now, we'll start seeing some underperformance from the FANG stock, and that could lead to more substantial pullback, so watch the FANG stock. I will post an analysis on the FANG stock in my Substack newsletter later in the week, so be sure to look out for that post. And the Russell 2000 moved above this 50% level of this range here. And if it continues to move up, look for the next potential level of resistance somewhere around this 1925. But if it reverses back and dip back below this 50% level, then look for retracement back down to the lower edge of this balance area, which would be somewhere around 1640. And the Dow Jones Transportation ended strong last week and moved above the 15,320. So we're going to see would it be able to come up to this level here at 16,730. The financial and the value stock helped push the Dow Jones higher last week. It is back above this 36,000 level, and it is only less than 2% from its all-time high. So watch for the possible new all-time high for the Dow Jones Industrial if the rotation continues toward the value stock. Otherwise, we could see it come back down and dip below this 35,000 level. And the New York Stock Exchange Composite is moving toward this 16,400 level here. So we're going to watch to see would it be able to move about the 16,500 if the Dow Jones Industrial makes a new all-time high. Otherwise, look for a pullback down toward this 15,000 level. Now going back here, this is the all-time high that it made back in January 2022. And that's a week after the Dow Jones Industrial had made a new all-time high. And back then, I said I have never seen a broad market index, especially the New York Stock Exchange, to be the last one to make a new all-time high. So this is what I call a non-confirmed all-time high. At that time, I also say we have to wait for another index, which is not a broad market index like the New York Stock Exchange, to make a new all-time high to create that non-confirmed top. And I'm saying that most likely it will be the Dow Jones Industrial. So we'll see, because the Dow Jones Industrial is the one closest to this all-time high right now. It's less than 2%. So it could well come up and tag that all-time high. And right now, we are not seeing an all-time high from the New York Stock Exchange Composite. And we are not seeing the Dow Jones Transportation anywhere close to its all-time high. So when the Dow Jones Industrial hit a new all-time high, then we'll put the Dow theory in play. And here, looking at the E-mini S&P 500 future, it did pull back to resolve these couple poor low here that left a week ago. And it broke out from this multi-day balance area and came up to this 4,600. So there's a single print zone from Friday here that we most likely will see it get resolved or get filled in this coming week. So if it comes down, we'll see would it be able to bounce back and move above this 4,600 level and move higher. Now, if it unable to move back up above the 4,600 level, then look for it to come down, possibly back test this edge here, somewhere around the 4,580 area here to see would it get a bounce from this balance area. But if it dip back into this balance area, then we have this balance rule or the retracement rule that will come back down to the lower edge of this balance area, and that will push us down to possibly get down back into this 4,500 area, because we have some poor structure that we need to repair down here, this poor low, and then we have some, a couple of the naked point of control. And from the volume profile for the E-mini S&P 500, you can see that it is trying to establish acceptance here last Friday, at the upper distribution. So we'll see would it continue to push and get above this 4,600 level and into the 4,640 and try to find a new area of balance. But if it comes back down to this 4,570, 4,580 area, then we want to see it bounce back up. If it doesn't and it get back into this balance area, then we're going to be watching the E-mini S&P 500 possibly retrace back to this 4,540 area, and then we'll see would it be able to chop around here, or will it just break through and come back down into this gap, this CPI gap here at 44.80. That would put it under 4,500. Now let's take a look at the ETF, starting with the diamond, the ETF for the Dow Jones Industrial. You can see that it closed at the upper range and took out the February 2022 high last week. And for this coming week, the upper range is between 368.50 and 367. And the lower range is between 359.10 and 358. And if it moves into the upper range next week, then we could see an all-time high in play. And here's the weekly chart for the diamond. Watch the pullback to the balance area here at the lower range. So we could see a failed attempt at the all-time high and then see a liquidation from this high here back into this balance area, this edge here toward the lower range. Just watch the price action and be cautious of any kind of a rough move upward. We could see some sort of liquidation. And for the SPY last week, we see that it took out the July high here and closed near the upper range. For the coming week, the upper range is between 466.30 and 464.50, and the lower range is between 453.70 and 452.70. Now, if the upside momentum from last week continue, then look for the upper range to be in play, and beware of this January 2022 pivot at 468.64. Otherwise, look for a pullback to the lower range and into this balance area. The Q was unable to move up to this 1x extension last week, and it closed in the middle of the range. And the upper range for the coming week is between 398.30 and 396.10, and the lower range is between 383.80 and 382.50. So the market is basically pricing in a 1x extension for the upside move, and the downside is the lower range and the CPI gap. So if the FANG stock continue to underperform, then look for the lower range and the balance area here to be a potential target area. Now the IWM, we see the IWM surge to this 50% level and came up to this balance area and close above the upper range of the weekly expected move. So we are finally seeing some bid for the small caps. And for the coming week, the upper range is between 191.30 and 189.20. And the lower range is between 180.60 and 180.20. So for the upside, look for the upper range and also this September pivot at 191.86. Then for the downside, look for the retest of this 50% level, which is in confluence with the lower range. So as a final note, there's a 33% chance we'll see another up week. And we can see the Dow Jones Industrial make an attempt at the old all-time high and possibly put in a new all-time high in the coming week. But without the Dow Jones Transportation making a new all-time high, any all-time high from the Dow Jones Industrial will put the Dow theory in play. That's a non-confirmed high, and that is negative for the market. So also the Dow Jones Industrial new all-time high would resolve this non-confirmed all-time high from the New York Stock Exchange Composite. So with the market participants still being complacent, we need to be on the lookout for any possible liquidation break. Now let's take a look at where the market is pricing in for the week based on the SPY option open interest. Now we see a put wall up here at 450 and a call wall at 459. Now notice these two peaks here. This peak here at 445 and also another peak at 455. The open interest here is about half of this 450 open interest. And that looked like a formation of some butterflies. So there seems like there's a lot of the butterfly have been set up. And the max profit will be ideally for the SPY to close at 450 on Friday or anywhere in between these two stripes. Then those people that's playing the butterfly most likely profitable. So this open interest kind of give you some idea what are the market price action might look like for the coming week. So the first thing to pay notice is this to 459. So as the price approaches this 459, look for maybe some sort of rejection back toward this 445, and it come down to this 450. Then we might also get a little bit of a rejection and push it back up for this 455. And right now, it looked like that, based on the open interest, it could be pending somewhere around this 455 price level. I hope you find this video to be informative, and be sure to smash the thumbs up to help promote this video on YouTube, and support this channel by subscribing. Thank you for watching, and good luck.